Hello everyone, my name is Tze Kang, the expert tutor of Performance Management PM. In this video, we will discuss one of the technical topics on variances analysis. We will be making reference to the following resources in the ACCA official website, namely Study Hub, in particular Chapter 14 on planning and operational variances, which require prerequisite knowledge, in particular to Chapter 12 and 13. Second, technical articles. Students are strongly advised and encouraged to spend sufficient time in going through and get yourself familiarized with the contents that found in the following articles: materials, mixed, and yield variances. Thirdly, the questions in the past examinations that found in practice platform will be strongly recommended for students in spending sufficient time to attempt on time constraint condition. In this part of the discussion, the variances analysis will be mainly focusing on the following key area. Firstly, the prerequisite knowledge that students need to get well equipped before listening to the following video. Second, why do businesses need to have and undertake variances analysis? It followed by the applications of variances analysis. Last but not least, demonstrations will be shown based upon a selected past examinations questions in performance management. So what are the prerequisite knowledge required in order for the students to well understood the concept and fundamentals on variances analysis in performance management? Here are the answers. First, you're required to brush up the fundamentals on budgeting. Secondly, the fundamentals and the understanding on standard costing system, as well as all the basic understanding on carrying out basic variances analysis. Second, why do businesses require variances analysis? First and foremost, it provides a useful control mechanisms, namely the feedback controls, allowing the businesses to understand things that went well and things that went wrong the other way during the past operations in the business activity. Second, it provides one of the common use mechanisms in assessing and measuring the performances achieved by business organization, which then will lead to the design and the development of the reward systems applicable to respective staff member within the firm. Finally, with all the feedback control information, it provides businesses to have a better understanding on ways to improve the business's performances moving forward. Let's then take a look at the basic mechanism of how to apply variances analysis as denoted by VA in most businesses' contexts. Here are the basic concepts in variances analysis. As variance represent the difference between budgeted performance against the actual performance achieved over the periods of time. Should the actual performance outperform comparing to budget, such variance is termed as favorable. On the other hand, should actual performances achieved underperform as compared to budgeted performances, such variance is termed adverse or unfavorable. These variances are mainly relating to sales activities as well as cost activities. All of these variances, whether it is sales or cost, will follow the basic mechanism of formulas in deriving the variances. Such basic variance analysis require the determination of the budgeted performances where it is reflected by the original budget that established based on original standard, including the prices and the standard consumption of resources that agreed by the management at the beginning of the time period. Such budgets were then compared to the actual results achieved in the period. These variances were therefore said to be arose from two main categories of factors, namely, factors beyond the control of the management. These are the variance that is mainly arising pertaining to planning matters. Secondly, variances arising as a result of factors within the control of the management team, which is mainly relating to each respective operational department. And therefore, these variances are of operational related. In the past, traditional variances analysis would only manage to display the variances either in the form of favorable or adverse, but it is not possible to further analyze the variance into the two of the crucial factors that will form a useful management information, particularly for improving the quality of planning as well as performance measurement and reward. In response to this limitation, a more enhanced version of variances analysis, which is namely planning and operational variances, have been introduced, and this is what the video is mainly catered for. As what the word planning and operational variances indicated, it divided all the variances into two categories, which deriving from three main sets of key information. Firstly, the original budgets that derive from the original standard that established at the beginning of the period. Second, at the end of the year, when the actual result were known, it is not likely and it is unlikely that all the differences between the original budgeted performance and the actual performance are all to the responsibility of the operational manager, mainly because they will have factors, incidents that's beyond the expectation and anticipations from the planning team at the beginning of the year, yet it took place during the period. Such unforeseen factors were therefore not appropriate to group it into factors that is held accountable by the operational team member. As such, to promote a fairer performance measurement, the budget that based on the original standard will need to be revised based upon a set of revised standards that reflected all the unforeseen changes and factors to therefore develop an updated budget, namely revised budget. Once the revised budget is established, any difference between the original and the revised budget would therefore classify as planning matter. This gives rise to the planning variance. If the revised budget's performance better off comparing to original budget, that planning variance is said to be favorable, vice versa. Let's name this as PV. On the other hand, should the actual results is different as comparing to the revised budgets by incorporating with all the unforeseen changes, any differences arose would likely to relate to the operational matters, which therefore become the responsibility area to respective department team member. These are termed as operational variance. Same note, should the actual result are better off comparing to the revised budget, it is termed favorable. Otherwise, adverse. Let's refer this as operational variance. Guys, whether it is the basic or traditional variances analysis that were discussed and in use, or planning or an operational variances analysis, all the above variances analysis could be further analyzed into at least two of the subvariants, namely variances that reflect differences in prices, rates, which is called the price or rate variances. Secondly, variances that depict the differences between the budgeted quantity versus the actual quantity. These are called the quantity or volume, usage, or some of it may be called efficiency variances. To some of the specific variants, such type of variances could be further divided into other subvariances that will be discussed in some other part of the syllabus. With that, it demonstrates the overview on the applications of variances analysis. Let's take a look at some demonstration with the following examples by demonstrating the ways, processes in developing the planning and operational variances further from the basic version of the variances. The following is the questions that appear in the section C of the examinations of performance management. The requirement that will be discussed in this video is mainly relating to part A of the questions, where it is clearly indicating it is asked the following is to be shown for each of the ingredient or material, in other words, for the following result of variances in the month of November, namely material price planning variances, material price operational variances, and material usage planning, material usage operational variances. Many students would always puzzle with a systematic and a consistent way to present the working in deriving the proper and the correct results of the variances. Here are some guidelines for your consideration. Should such variances is to be calculated for a single type of the material, or we call one type of material, you may consider the following templates to be displayed in the spreadsheet as the working. Guys, keep an eye on the first column, second column in the middle, and the last column on the right hand side of the screen. These are the three sets of informations that one required to pick up from the information provided in the exam questions. The first column indicates the calculation of original budget based on original standard price, let's call OSP, which would then multiplied with the original standard usage based on actual output, let's call OSU. These products will give rise to the original budgeted cost for material. Then, moving on to the middle column, that's where, by the end of the period, should the management aware there were some of the unforeseen incidents that took place, it should then reflect those changes onto the standard price as well as usage. To update the standard price and usage, let's refer this as the revised standard price, or we call RSP, and the revised standard usage for actual output, let's call RSU. As such, the product is then called the revised budget. Finally, the last column depicts the actual performances of the periods, which derive from the actual price, AP, multiply the actual usage for the actual output, or we call AU. with the three main sets of the values that we have derived, student will be much easier to remember to create two other columns that require the development of all the subvariances. If you look at the first column on the left, by following the mechanism of taking the left from the top and taking the right from the bottom, that will allow us to establish the values of the middle column. Let's apply the same note to develop the other column on the right-hand side of this table. By taking the values on the left at the top and the values from the right at the bottom, the product of these two figures will give rise to column 4. How do we make use of these 5 sets of values to derive all the variances? And the answer is pretty simple. By looking at the comparisons of the value for column 1 as well as column 2, it is clearly there is no difference on the prices, except there is a difference between the usage. These differences hence give rise to usage variance. And because the usage variance represents the difference between the original and the revised standard, this difference is clearly representing planning variance. As what the questions say on the 4 items of the task, that refers to the material usage planning variance as such. Same note, when we take the value on the second column comparing to the middle one, this difference gives rise to the difference in the prices between the original standard and the revised standard. Hence, it is therefore the price variance on planning variances. Item 1. Guys, the following discussions and the mechanism of the formulations in the calculations of the planning variances is just one of the version out of 2, which is acceptable in the examinations context. Let's take a look at the right-hand side of this template. By taking the middle column, comparing to the right-hand side, the column 4, the differences in this value will give rise to the comparisons between the revised standard usage and actual usage. These is therefore again the usage variances, but after revising, the differences must refer to operational variance. That is referring to item 4, material usage operational variance. Finally, comparing the value of the last 2 columns, that give rise to the comparison of the pricing, which therefore it gives rise to price variance. And based upon the revised standards, this is obviously the operational variances. And guys, again, there will be 2 versions of the formulas that are acceptable by the examination, and this is one of it. Finally, by combining the 2 of the sub-planning variances, it will give rise to material cost planning variance. Alternatively, we could take the original budget versus the revised budget. That will give rise to the same result as well. Same principle apply for operational variances. By combining the 2 of the subvariants, that will give rise to material cost operational variance. Finally, by combining both the variants together, that's made up material cost variance. Alternatively, we could just take the original budgeted material cost against the actual material cost. This is a fundamental presentation based upon situations whereby there was only a type of material. Referring back to these questions, as there are 2 types of materials, namely soybean and sugar, let's refer as SB and S. To present the working I would suggest instead of presenting the templates in this manner, it would be more practical by displaying all these working to one column, and we will share the column across as many columns as needed according to the type of material. As such, the following templates is applicable for businesses or exam questions that come with more than one types of materials. So the templates will look in this manner. As you may see, all the calculation will appear in the first column, whereby the abbreviations as shown in the first column are just no difference comparing to the 5 set of columns of workings that were discussed a while ago. So what I have to do is to extract these calculations as column 1, 2, 3, 4, and 5, and it will all represent another row on the side column at the left-hand side of this table. And let's refer the value of these calculations as the value A, B, C, D, and finally E. This is the basic templates that will be recommended for dealing with any kind of cost variance as long as there are needs to derive planning and operational variance for more than one item. These will be the templates that will be more practical. We will then apply these working to apply for the 2 ingredients, soya beans and sugar. In order to figure out how exactly the number will get fitted into these templates, I will now take you through to some of the key information found in these questions. Guys, before you listen to the following video, pause the video, spend some time to read through these questions on your own, try to figure out what are the key informations given, and how do you make use of the figure in deriving the required variances in Part A. Well, I suppose that you must have got an idea on the answer plannings based upon the information given. The following demonstration, instead of showing the full answer, it is more of an answer planning demonstration. How do we retrieve the relevant number and place it into the right placing according to the template that we have designed? In simple, the company Variance, it's a manufacturer in a ranges of non-dairy products. One of it is soya milk. The following details are relating to the operations in the month of November. The table 1 is providing information on production levels, which is what we call as output in common. Given the finished goods production quantity, the following information tells us, in particular, the information pertaining to the calculations of variances is started by telling us the standard cost card information for soya milk. In this standard cost card, the information that found in this second template, it's clearly representing the original standard applicable for the month of November. As such, these numbers will be placed in the section where we need original standard information. And as a result of that, if you were to take soybean for reference, the cost per kilo, the consumption of soybean by kilo and measured by kilogram will be extracted and placed into the first column. Bear in mind, the original standard usage as mentioned should be based on actual output. As such, the standard consumption of 0.2 kilo will be multiplied with the actual output level. And that is how the first item A is derived. Other than the standard cost card, the following information found in the next paragraph. Based upon what you have read through a while ago, you would notice the information that found in this paragraph are clearly reflecting the actual result, with the clues of past tense were used in the description. So what you have to do is to just take all the relevant actual data and feed into the item which is found on the last column that we have discussed a while ago, showing the actual result onto the price and usage. That's where and that's how the figure was extracted for soya bean from this paragraph. Then, moving on to the second half in this paragraph, it is telling us about changes in prices in the month of November. These changes in the month of November seems to be beyond the expectation of the management team. This has given a hint and clue on the need to revise the standard price. As such, make use of this information to fill up and derive the standard price after revision by taking into account of all the relevant changes. Furthermore, by indicating the responsibility area of the manager, that would basically serve as a clue for deriving the commentary when we are to comment and interpret the performances on the variances. And finally, the last paragraph, it's showing us about some changes is made regarding the consumption volume on the ingredient. These changes were made at the beginning. That seems to reflect a change on the standard consumption or standard usage. These will again be used to derive the third item, which is especially showing and reflecting the right number on the revised standard usage. Guys, by extracting all the numbers, original standard, actual, and revised standard, but that's how we will be able to derive the value of A, C, and E. Guys, once the three set of items were found, don't you think it is a lot easier to work out the value for B and the value of D as such? You should pause the video, try to complete and fill up the space before the videos carry on. Well, finally, just a reminder from the questions telling you, there's no changes that make on the above standard cost card. That confirm all the information in the cost cards are original and before revision. By the time you have derived all the value of A, B, C, D, and E, the last step is to follow the instructions that discussed a while ago to derive the 4 items of variances as described. Guys, spend some time to follow these instructions and try to derive the variances for the 2 material and make reference to the model answer for a better understanding. That's all for the illustration and demonstrations for planning and operational variances.